Hi guys, this is Pete from Pete'sTwoCents.com. I've been looking at a lot of stocks lately in the financial sector, especially in the banking sector. And one of my positions currently are Bank of America, ticker symbol BAC. I took a gamble on this stock back when it was just like falling off a cliff. I was a holder for some time. I started losing money. I sold it. And then when I saw certain things that the government was doing, the bailout and so forth, believe it or not, the countrywide acquisition caught my attention because I used to be in the mortgage industry and in the real estate industry. So I know let's call it the back end of the business, and it is, funny sometimes. There is a lot of fraud, at least fraud that people try to commit. And and it's a dirty business, but in the same run, there's a lot of money to be made legitimately across the board. You got to remember, an average home anywhere in the U.S. is $100,000 to $200,000. So with that said, commissions are large from everybody in the book, from the attorneys, from the mortgage brokers, from the realtors, all across the board, title companies, and so forth. So bottom line, what I'm trying to get at is when Bank of America made the acquisition of Countrywide, even though Countrywide was faltering and there was a lot of bad news and bad press, and the pundits were going crazy. Um, I said, "Wow, this may be a good purchase in the long run, because even if you have a lot of companies in the Countrywide portfolio failing, and Mazzillo, which was the CEO of Countrywide, he knew what he had on his books, and he knew what he had on his books, regardless if it was failing. Let's say in the overall market, the real estate industry was collapsing overall. He knew he had some major assets in there. So I don't think Bank of America, at the end of the day, bought a bad company. Okay, I really, really don't, because in the long run, if you get 30%, let's say, let's even go 40%. 40% of bad assets in that portfolio of Countrywide. Okay, let me tell you a little secret. 60 to 70% positive notes, they're gonna make a kabillion dollars. $1 billion. So they're gonna do very, very well in the future. They're not gonna get all the money back tomorrow, but over the next 30 years, let me tell you a little secret, they're going to do well. So Bank of America is a monster. They are the 800-pound gorilla. Okay? That's why I took a gamble on them. I picked them up at $3 and they're already trading at, I forgot what it is, 12 or 13 bucks, whatever it is. And I'm going to hold on to them for a while. Now, with that said, the reason why I'm bringing this video to you today is because I think a lot, at least the section in the sector that I'm focusing on right now that you're looking at, a lot of these stocks are starting to turn around. Except for a few. Obviously, I didn't make the list perfect, but AIG, obviously, I wouldn't pick. Citigroup, is off. But if you look at the other stocks, they may have a few winners in there. Goldman Sachs, no brainer. Goldman Sachs has done over $15, over 20-30% in the last 3 days. Okay, so there's a lot of money to be made in the financial sector. Don't be fooled by the pundits out there with all the negative news. Look into the financial sector, look into the banking industry, and guess what? You may have a couple of winners in there. At least start off with this list. This is Pete from Pete'sTwoCents.com. You can always find the podcast here or on my website or at iTunes. Thanks, guys.